Resume recording.
Okay.
There you go.
There we go. All right. That's important. All right. One more chance to do this. You got somebody let Stephanie in.
I got her.
Got her. All right. So let's just kick off with a screen here. All right. So welcome everybody to the July meeting, July 6th. I hope you had a great 4th of July. I want to welcome all our new members and our guests and our old members for being with us. We strive to serve you and we welcome your participation in the group. Before we begin, I do have to give a liability disclosure. I do want to say that Boston REIA assumes no liability or responsibility for the outcome of any real estate transaction, decision, any other action that any other Boston REIA member or visitor enter into as a result of attending any meeting, listening to any guest speaker, or talking to any Boston REIA member, guest visitor, or person's real estate is a business, and you should be doing your due diligence for every single transaction, person or you listen to. Because also, I found out the other day that not everything on the internet is true, much to my dismay. So when I first came online on the internet many years ago, I thought this is great. It's all truth online. So that's not the case anymore. But if you don't know Boston REIA, we are the most active real estate investing community in New England. We have the most deal flow. We do a ton of networking. We always try to provide you with the best in education and investor resources, and you're going to find out even more about some of that great stuff tonight. We are part of the National REIA, which is the largest trade association of real estate investors in the United States. Millions of members. We have massive trade discounts for our members, and we have other discounts that we also provide to various local organizations. So we'll talk about a few of them, but when you become a member, you will find out about all of them. So I've just put up a screenshot of some of our major vendors that offer fantastic deals for you. So moving on. Okay, I'm going to turn the meeting over to Sarah for about 5 to 8 minutes. Sarah is our investor-friendly realtor. She has her eyes and fingers and everything else on the pulse of the market, what is actually going on. And she's just a great resource to have on your team. Like I said, an investor-friendly realtor, you always need one. So Sarah, without any further ado, why don't you take over, share your screen? We can talk about the Boston markets, what's going on since the last month and what's going on ahead.
Sounds good. Actually, it's very interesting right now what's happening in the market. I think you can see my screen, and can you, is it
it's small, but I can see it.
Oh,
but is it big now?
Yes.
Is it good? Okay. So
Yep.
so I'm kind of keeping track from what happened since the beginning of the year in January on the interest rates, available homes in the market this year, this time of year versus last year, contingent back on the market, and price changes. I want to grab your attention to that number. Beginning of the year, even though inventory continued to be really low, we had more houses than last year. And, February was the same thing. March was the same thing. And actually starting March, that number. So, we started the year more inventory versus same day last year here. And then that number kept going slowly up. Coming March, very approaching to be equal amount of homes. Same thing for April. Now coming May, we just started, we were about 10% more, which is again very close. Now they're almost, they're like almost equal. But I actually wanna grab your attention. So I wanted to compare side by side last month versus this month. Okay, so what happened last year So last month we were at almost same inventory, 3294 versus 3210, which is pretty much the same. Interest rate 7.15, almost 7.25, pretty much similar. But look at the inventory. We're down more than like about 27%. This is a lot. This is huge. We still have contingents and under agreements more than the back on the market and more than the price changes. Almost similar in percentages, but but overall sales, has kind of slowed down a little bit from last month. Even if you just look at the count, like, let's say this is almost 3,300 versus 3,100. So it's a lot, a lot of homes. And this is just on Middlesex, Essex, and Suffolk counties. So that's when it comes to some numbers. But again, I kind of kept been keeping an eye on interest rates been going up and down on weekly basis, throughout these months, and low inventory has been a concern for Sam Cotter for several months, and he is the chief economist for Freddie Mac. And last month we're approaching 6.8. And then this month, actually, we are over, and this is actually the highest that we have seen this year. Let me just try to move this here a little bit. So what Sam Cotter said this week, he said mortgage rates continued their upward trajectory again this week, rising to the highest rate this year so far. This upward trend is being driven by resilient economy, persistent inflation, and a more hawkish tone from the Federal Reserve. So basically we are still seeing, like, when I represent buyers, I'm still putting over asking, and I still can not get the house. When I represent the seller, I am getting over asking. So what I'm seeing right now in the market is that even though, inventory has been lower, but also but also buyers, a lot of buyers have dropped off because of the interest rate. So they keep like raising the interest rate and raising it, so in order to kind of like eliminate more buyers. And again, on the other side, that's affecting the renting market so much, because people have to live somewhere. So if you can't buy, you're gonna go towards renting. But again, so inventory has been a problem, and then now they are trying to keep rising the interest rates because people are still overbidding. So they're trying to like being more aggressive. That's what we're seeing right now. But again, is that a scary thing? It's not as scary because if you think about it, like if I had 100 buyers and fighting over 10 homes, and then now I have 80 buyers fighting over 8 homes, so I'm ending up in the same percentage. So if I'm thinking about it like from percentage wise, that's that's where we are. But yeah, but definitely inventory is it's more than a quarter of what we had last year, which is a lot. And interest rates are kind of hovering over. So they they would like on 1 week they would be like 25%, 0.25% higher or lower. But now we have been seeing slow, going up slowly every week, but it has been very steady and it has been not going down. And I really don't think it's going to go down anytime soon. So I feel like, if you're a flipper, if you have a project, I would just wrap it up and get it out there as soon as possible. And that will be it. And
Awesome, Sarah. So I think what I pull from this is there's still buyers out there. They'll buy at any price. A lot of them are still primary home buyers. They're not really per se investment properties they're buying. So
I have both.
Yeah, okay. So they're not afraid if they have the money to put it up there, knowing that worst case scenario rates come down significantly, they can refi.
Absolutely.
So yeah, I still think it's a healthy business to be in. Yeah, you have to be more aggressive. You have to add value to your flips. But deals are out there, and I think the other side of the coin is when you do your lead generation, target more motivated home sellers and or go outside of Boston proper, 15, 20 miles out to start, getting some deals. So, thank you very much for that. And we'll cover some more of that later on, some of the
Absolutely.
new things we got going on.
Yeah.
All right. So, you see here. All right. So let me back to this here again. But yeah, so just want to talk about our local business partners and talk about money in particular. There is a lot of money out there that is looking to be deployed. So what I'm just like to saying, if you're new and you don't have money, please look into our resources about what money partners we have, because they have to place it somewhere, and hard money, private money, it's there. Actually, if you're just going to flip a deal, quickturnmoney.com, it'll give you a free proof of funds up to $500,000. Just prints out a proof of funds letter right there on the go, so you can start making some offers. It doesn't cost you anything until you actually transact, and it's only 1% of the price. It's like rental money. So, please use the money that's available. I've never seen so much money available at all in my career in real estate investing that's available to now to do deals. So guys, and the best way to get updates from us, if you're not already on our newsletter, please go to our front page of our website, bostonrealestateinvestorsassociation.com. And on the right-hand side, you'll see this little box. Put your name and email in there to make sure you're getting all your alerts. For in-person networking, we meet on the first Monday of the month at the Stellwagen Beer Co., and that's our South Shore Real Estate Investor Association. We're going to be rolling out some other subgroups based around area as we grow leaders. And if you're interested in running one of those subgroups locally and a small group to network, please reach out to me at bostonrea@gmail.com, and we're happy to support that and put some dollars toward that to have more networking in person going on. Okay, so one of the things that we launched, we just had a huge conference with all our chapters out in Las Vegas, and this is where we learn and roll out new things to our members. And one of the things we're rolling out right now, if you log into your members area, that you can list your properties to our database of investors. Right now, there's nothing on it because I haven't personally listed anything. This is really the launch of it. So if you'll just go into the members area and you'll see property listings, just walk yourself through the wizard and put everything on there. Right now, this will just go to Massachusetts investors. The plan is that we will roll out the property listings to all investors nationally at a later date, but that's also very promising. But remember, we have over 5,000 investors within our system that have viewership. So we will be posting more about this on social media to make sure that people who aren't even in the system can get a chance to view these properties. And of course, that will drive memberships for us also to get these deals that our members have. One of the other things I'm excited about is a little bit more about what Sarah was talking about. We have partnered with Homeworthy, which now we have a data portal. So you can go in here, and again, you go into the members area. Let me see if I can pull this up a little bit, and you can get a whole bunch of trends. So when you log in, it's going to look like this. And then one of the things we're going to do, it's already been doing, is you can get housing market trends, conditions, and insight to support your investment decisions. Again, this is a system that has been out there for a little while, but we have now partnered or basically paid them to use their system for all our members. So this is huge. This was something that, they were charging $89 a month for their users before. You're now getting it free, included in your membership. So if you want market and demographic data about a specific location, you just enter that address search at the top right, you zoom into it. You can click in via county or neighborhood that interests you. And then it's going to start telling you what criteria, popular with families, moderate or high household incomes, high rental turnover rates, find me a place, query tool, all through that menu bar at the top. So if you're looking to easily see one piece of data for location around the country, that's right. You can pull from across the country, even though you are in Massachusetts and a member of Boston REIA, you can pull things from all across the country. So this is now included in your membership fee. And this is just to expand on what Sarah is talking about. So I'm very excited about for that. And you'll see it's right down here at the bottom. If you can see my cursor, it says REIA data portal. The other thing we are launching, and we'll talk about in the next couple of months, but as of today, we are launching it, is our partnership with Life and Air. And Life and Air basically is a real estate and lifestyle company who cares about both your personal and business success. Life and Air has been around for quite a while, and they take a life first approach to business success and being balanced in what you do. So as a member, you will now get a copy of the best-selling Life and Air book, 2 tickets to the Get a Life Getaway, which is a live training, which is $1,000 value. You'll get a ticket to the Life and Air Business Builders 3-day MBA workshop. That's $497 value. And you'll get a whole host of library tools, Life and Air tools, resources, and content. We also have a getaway once a year. Whoops, we need a stock image for that. And it's just what other people are saying about it. It's, at least saying my brain finally connected all the dots between where I was and where I'm headed, and getting that freely of it took my breath away. A couple other good testimonials. I feel like was on a roadmap to 10K our business into the next level, has clearly defined goals and how to get there now. So we have some upcoming Life and Air events that you are now going to get. We have one in Raleigh, North Carolina, New Orleans, another one in Raleigh. And you just go to lifeandair.com, upcoming events, and you'll get access to all that now as part of your membership. And I do have Life and Air a speaker coming in to talk about in the next 2 months. So they will share with you all the benefits and how it works, and to add that to your arsenal, make sure you have a healthy, wealthy, and prosperous, balanced life in your real estate business. So guys, if you're serious about real estate investing, let us help you make money. Join the Boston REIA tonight. You'll get free entrance to our monthly meetings. You get free entrance to internet meetings, free entrance to subgroup meetings. You get our Home Depot 2% rebate program, which Sarah's going to talk about. We also get customized pricing. So we never pay retail at Home Depot for projects. Okay. Once we decide, hey, we're going to run a project, we're going to get customized pricing on that. So Sarah's going to talk about that more. And without further ado, Sarah, are you back with me?
Yes, I'm here.
All right, let me stop my sharing and we'll go to you.
Sounds good. And I'll take it away. Hello again. Hello again, wonderful people. Yeah, so I'm eventually an investor-friendly realtor, residential, commercial, Mass, and New Hampshire, and Boston REIA. So Duncan and Kelly, they have negotiated a deal with Home Depot to offer exclusive benefits to our members. So if you were to go to Home Depot, you would still get discounts and you get rewards, but if you are a member, you're actually going to get more. So so this is basically a rewards program. So think about it like a CVS rewards, or a Shaw's reward program or something. So basically, the more you spend, the more discounts and rebates you get in return. Every company has its own way, its own setup. Home Depot is no different. So Home Depot offer a 2% rebate biannually on all purchases. The only catch is that you need to spend $5,000 minimum per period. They have fixed rebate periods, January 1st until June 30th, and then July 1st until the end of the year. And that's also another important reason to actually sign up tonight, because now you haven't missed anything. That second period just started. And all the rebates, they get mailed out within 60 days. So if you get, if your rebate is under $1,000, you're gonna get a Home Depot gift card. If it's 1,000 or more, you get a check. So make sure also, you know, your mailing address is up to date with Home Depot, so you wouldn't lose your rebates. Also, our members, they start at the gold tier with paint. And what does that mean is you get 20% of paint immediately, and that has nothing to do with the rebate minimum. So let's say you join tonight and you have, you know, you're finishing up a project, or you just need paint, all you need. And that's gonna cost, you know, let's say $2,000, right? So that's under the $5,000 rebate minimum. You just go and you get the 20% at the checkout. So again, we said that this is a rewards program. So rewards program would be always attached to your email and your phone number. So basically, if you enter your registered phone number at the pin pad before you swipe your card, that's when you get, or actually this is the only way to get the 2%. On top of that, the 20% you get that at the checkout, but the 2% you get it at the end of the 6 months period. And another benefit for that is that you can track your purchases for up to 24 months. You know, from the day of the purchase, you can go back 24 months. The 20% of paint is applicable to paint, stains, and primer of a gallon or more. It doesn't apply to quarts or spray or any of that. It has to be a gallon or more. Also, our members can get up to 20% off select Hampton Bay kitchen and bath cabinets if you purchase 10 or more cabinets in a single transaction. How it works, you get 10% from National REIA and 10% from Home Depot, and they both are stackable with any other store discounts that are going on at that time. So you can at least get 20% on the Hampton Bay kitchen and bath cabinets. Also, a volume pricing program or a bid room. This is another fantastic way to save some money with Home Depot. It's very simple and easy. You need to have a list of large items that's going to cost $1,500 or more in a single transaction. Bring it to the pro desk, have them prepare a quote for you, and after that, have them send it to the bid room. And then I want to say within a few minutes, it just comes back to you with any applied discounts for up to 15%. So this is another way to save some money. And then, you know, of course, you pay with the registered. You enter your phone number on the pin pad, and then you pay with a registered card, and then that registered card, that's where you get the 2%. So you get up to 15% at the checkout, but then the 2% gets accumulated at the end of the 6 months rebate. The only thing that I wouldn't send through the bid room is the paint, because you just get a better deal on you know, with the 20%. You know, normally if you're just a pro member and you're just signing up, you would need to spend $6,500 on paint in order to get to the gold tier. But with us, you just start right away at the gold tier. So, you know, it's a no-brainer. I would just call or text Kelly immediately, you know, or after the meeting, and just like say, sign me up. And it's very simple. Basically, you start with Kelly, and the reason for that is because you also need, so we need the same email and phone number that you used to join with the Boston REIA. That's how they connect everything together. It's very easy, very simple, takes about 10 minutes, 8 to 10 minutes. We do it directly from Home Depot website. I don't have any special CRMs or anything. Very simple, very easy. All right, thanks again, and enjoy the meeting. Give it back to you.
Awesome. Thank you very much, Sarah. All right, let's go back to sharing my screen. All right. Okay, let's go to, so guys, we just spoke about a few of the benefits, but we have a lot of different benefits and you can find that on our website. Why join us? What are some of our other benefits, major benefits? Boston REIA, Boston Real Estate Investors Association.com. You can look through all of them. Main thing is you want to join. Let us help you get started making money on your first deal, start getting the benefits, start networking with other people. The cost of the membership is only $280 per year for a single membership and $400 for two people, which could be partners or couples or, however you want to do that. So you can buy it online, or the fastest way to get it is text Kelly at 864-906-411. So that is our membership fee. And if you are a broker agent for real estate and you are, again, I mentioned it, you're interested in running one of our networking meetings around Boston, please shoot me an email at bostonrea@gmail.com. I want to take the next couple of minutes for our people on the call for what we call our haves, wants, and needs session. So just really quick here, because we got a lot of people on the call. The request must be specific. Please limit what you do to 1 minute or what you're looking for. Please put your information in the chat box you will see with your contact information, phone or emails. Please don't advertise, but I'm going to open it up now to everyone and who wants to go first about what they have. Please, raise their hand or let me know somehow. You'll see at the very bottom, you can raise their hand. So I'll just give it a chance. So while people are waiting there, guys, like I said, we have money. Looking for any sort of deal can get a great return on. Just got to, again, shoot me an email at bostonrea@gmail.com, and I'll take a look at it and see if it's something I want to participate in. But we should be using other members in the groups for private money or hard money to do your deals. So anybody got anything they have, need, or want, just raise their hand. I'm going through it right now. Nobody wants money. I don't see anybody. I'm going to, let me see. Let me unmute people here. Anybody writing in the chat?
It looks like Linda Diaz is raising her hand, Duncan.
Okay, can you control that and unmute her and let her talk?
I am unmute myself.
Great.
She did it.
Good. All right.
Thank you so much for putting this together. This is very helpful because I'm starting, and I just want to get a little bit more information about. I'm interested in purchasing multiple units, like 30 units, and I know this is a big bite for me to chew, like to take as a beginner, but definitely funding is something that I need. And you said there's money out there. Can you share a little bit about what the process or how to obtain that and what's the process?
Well, I think the main thing, first of all, is to identify the property that you want. If you need help identifying a property, you would like to probably speak to a few investors and ask them what type of property they would be interested in partnering on. Another good reason to partner with the REIA, getting your information in the chat box. Because a lot of people have to go into their first deal, especially these bigger deals, with partners. So, that's one way to do it. A really huge multifamily deal, you really have to be sponsored into it if you're getting money from a traditional bank, which means they want somebody with experience, really to oversee the project from you. So, there are deal sponsors out there. But, it really comes down to identifying the property and then, going to other investors and saying, hey, I got this, is there something that we can do? And as part of our membership and our weekly calls and our education within our system, multifamily is a hot topic and a lot of people are interested in doing deals. So, it's just really like taking the first step, getting involved with us, and defining actually where you want to go, and then targeting those types of leads. Now, I might tell you it might not be in Boston proper, it might be 30 minutes or an hour outside of Boston, but that's okay. That's where you're going to find better multifamily deals. So did that answer your question?
Yeah, it does. I want to ask another question. You said something about finding a sponsor. That my question is, how do you find those? And two, do you guys have some type of Excel document that analyzes the deal, whether it's a good deal or not? Is that something that you guys have or be able to help?
We do have deal analyzers, more geared toward single family homes, but there's certainly ones that we can point you into in the right direction. There's ones I prefer. There's one that I prefer. It's like $100, but I mean it literally prints out everything. Besides doing the numbers, it'll write your letters to investors to give them the exact information they need without giving away your deal. So, I'd be happy to share that, in an email later on, but it's just a fantastic spreadsheet that gives everything not only that you need, but your investors need.
Excellent, that would be great. And then you said something about to find a sponsor.
Yeah. So sponsors are people that just have been in, multifamily deals before, and they're out there, and it's really just a question of, would they sponsor a deal? Have they done business before in this type of deal? Ask them, they sponsor a deal. No, they'll know exactly, what you're talking about when you're going for, traditional finance. Ideally, if there's so much money out there, you might not have to go the traditional finance route, but if you do, they'll know how to address that.
And so if I join, become a member, because I'm a little scared. I'm ready to move forward, but I'm scared through this process. Are there other people in your organization that could assist me with this process?
Sure. So what you can do is look on our website and look under our expert resources, and you'll see a team of people there and what they do and how they can help you.
Okay, awesome. You guys been great. Thank you so much.
Okay, you're quite welcome. Anybody else for have, needs, or want? Kelly, anybody else there? Because if not, I want to move into our main part of the meeting, which is what I'm excited about, who I met at the mid-year, a new vendor with the national REIA. And I'm actually going to stop my share right now. And those are tax, one-stop tax strategists. And through talking to them, I found out some tax benefits I was missing, and showed me right off the bat how easy it was to deduct quite a lot of deductions that fit my personal profile, but that I was amazed was out there. So, everybody's tax situation is different, but when I see that, there's another 100 grand of, potential deductions that I could get, was very exciting to me, because nobody likes to pay the tax man. Look, I think it's always better to have a tax problem than an income problem. And at the same time, you don't want to not pay taxes. You want to, or I should say it's really tax avoidance rather than not pay your taxes. So this is stuff you need to know. A lot of people think taxes are boring, and it's the crappy work of real estate. And you know what? That's why you hire people. I don't like doing my own taxes. I don't like doing my own bookkeeping. I don't like doing my own property management. You hire the people who have the skills and the strategies that are experts who enjoy it. And that's why I'm bringing it to you, to make your life easier. So without any further ado, I'm going to have Melanie Skipma And Byron, I think you're on here too. Yeah.
Yep, perfect. I'll share my screen and we can get
Go
started.
ahead. That was your intro. Take it away. And,
Awesome.
if you can hold your questions to the very end, I promise Wally will ask them for you. Just type them in the chat bar. All
For
right.
sure. All righty. So yeah, like he said, taxes can be boring, and I would definitely agree with that. So our job today is to hopefully make it a little fun for you. So we're gonna hopefully give you some more money to boost your bottom line. And really, before I jump into that, this is a little story time here. My dad, he's Byron, he's here talking with us, so we know he's alive. This was last summer. He was mountain biking along and got whacked with this big old redwood. And luckily this part didn't hit him, but he got hit with some branches because he had, broken back, broken ribs, bleeding on the brain, broken teeth, and, all sorts of stuff. But luckily he's okay and still good. And he's even going to go golfing after this. So he's good to go. But oftentimes when people come to us, they feel like my dad here. They feel like they just got whacked with a big tree or big something out of the blue. And no matter, even if you're prepared for getting hit by a tree, it's never a good time to get hit by a tree. And so our job is to at least make that tree smaller. So, or take it away and protect you from that. So hopefully we'll be able to give you some strategies that'll help you out today. We'll be sharing some just creative strategies for you. We're going to go through just a client story and teach through that. What we did with one of our clients, Juan. It's a fictional name, but a real person. And so we did the fictional name just to protect his identity. Being in taxes, it's personal stuff. And so we have to be careful to protect that. But when he came to us, he was, a flipper in California. He had a very successful business. He was netting $1 million. And with that, he was going to get whacked with that big tree at $400,000. And, the cost of supporting his family, he had 2 kids at home that were still in the home under 18. He had a wife that took care of the kids. And then they had in-laws that they were supporting, plus a daughter that was going to Arizona State. He just had a lot of expenses that weighed him down, made him feel like he was working his butt off. And on paper, he looked like he made a lot, but he didn't feel that way at all. He felt like majority of his hard work, hard-earned dollars was going to the IRS, and then other people not able to enjoy it, So he felt like, do I just need to keep working hard? Do I need to make more money? There's just got to be a better way. And so he came to us, and we took him through our 8-step tax solution. We'll teach you how to do that, and maybe some of these little steps will apply to you. But for him, it was able to save him over $67,000 a year in permanent tax savings. And then we were also able in the first year to get him a $1.4 million deferral. And then it turned into about an $8 million deferral in later years. So saved him a lot of money and really impacted his life. So we're going to jump into that. All right. So the first piece to all tax planning and any type of strategizing really is to have a clean set of books. So get your books in order. With Juan, we looked at his books, and Dad, what did we find?
Well, basically, he was actually had a decent set of books, but he was actually doing a little bit of fraud too. He had a side of his business. He was billing people, and he would invoice them, collect the money, then he'd void the invoice and wait to rebill them after January. So I had to show him that, there's things he could do legally, but also that he could go to prison for what he's doing. So you want to just make, our goal is to have you pay as little tax as legally possible and stay out of trouble, with a big emphasis on stay out of trouble. And that's one of the things a good set of books will do for you.
Mm-hmm. We also taught him just what we teach all of our clients is for a clean set of books. The first thing is to have a separate bank account, separate credit card for all your business transactions, and then have a software that automates the process so that you capture all of your deductions. If you're in the 30%, let's say you have a 30% tax bracket, that means every $100 that you can generate in deductions, you're going to save 30. And so it's important to capture every little deduction as much as possible. And having something that automates the process and captures that is the first step to that. And so really, we can't do any tax planning without having a clean set of books and knowing your numbers. So that is the first piece. Next, we looked at his entity. So having a proper entity selection is really important, and it can save, I've seen it save anywhere from $13 to $1,000 per year if somebody was in the wrong entity. And so it really can make a difference. We did a little cheat sheet here. You guys can take a screenshot. Juan was an S Corp. And so for his income level and his business, that was perfect. He was exactly in the right entity. We'll teach you one thing that we did to tweak it and make it even more impactful. But depending on what type of business you're doing, what type of real estate you're doing, it really depends, as you can see. And typically where it says it depends, like a regular business, Airbnb, typically that's around the $60,000 to $1,000 in net income threshold is when an S Corp makes sense, but some states vary. And so that's why we just said it depends. So yeah, it's just really important to have the correct entity selection. One thing to know, and this is the thing that we tweaked with Juan, is to have a proper salary set up. If you have an S corporation and you have to do the officer payroll, Juan was paying himself $120,000 a year in W-2 income. And so what we do is we look at the industry averages, we look at the low but reasonable W-2 for what he was doing. And then we were able to land on $60,000. So we knocked off $60,000, and that saved him over $13,000 in tax each and every year. The savings came from QBI and then FICA taxes. So the FICA is just payroll taxes. We're able to save him on that. And then, which is the 15.3% of that extra 60,000. And then what QBI is as a, as a business, you only have to pay tax on 80% of the net profit. So you get an automatic 20% deduction to whatever's in your net profit. So what we did is we put an extra $60,000 in that net profit, and we're able to save $4,400 for him. Dad, do you want to add anything on this before I move on?
You said it very well.
All righty, cool. I'm learning. All right. The next thing we taught Juan how to do is how to rent his house to his business. So the Augusta strategy you may have heard before, and this is basically you can rent your house out for 14 days tax-free, and you can rent it to people, you can rent it to, whoever. What we do with our clients is we have them rent it to their businesses for 14 days and hold their corporate board meetings. What that does is it generates a deduction on one end, and then it's tax-free on the other end. And so for him, he was able to save $9,600 in tax, which we generated a $19,000 deduction, and that saved him at his tax bracket $9,600. And so you just hold your corporate board meetings in your home. As long as you keep that agenda and keep those minute meetings, then you'll be able, or the meeting minutes, you'll be able to generate enough, basically hold those meetings. And it can be with you, yourself, and I. That justifies that expense. All righty. Next, we taught him how to get those kids that are under 18 making money for him instead of sucking it all away. So legal child labor, I like to call it. This is my daughter here. It's actually her birthday today, so I'll hang out with her after this, but she's turning 8. And so she is my little model. I also have a 6-year-old. They're my models. I do a lot on Instagram, and then on our website, and then on our speeches here. They're my models. And so I use it to talk about kids' payroll. But for Juan, he was able to use his kids as models as well for his business. The little kids, the model's easy just because it's got to be reasonable pay for reasonable work. And so, the Gerber baby makes 70 grand. So what is reasonable? But you can pay your kids up to $13,850 a piece tax-free. And there's a way to do it if you're an S corporation. For one example, we had his wife set up a sole proprietorship, and we had his S corporation pay her as a 1099 subcontractor modeling agency. And then she paid the kids through there. And that eliminated all the payroll taxes that he would have owed if he would have paid him through the S corp. So there's different ways to do it to maximize it. But for him, that saved him about $13,600 in tax, and that generated a $27,000 deduction. So pretty impactful. And to make this even more impactful, if you fund a tax-free vehicle like a Roth IRA, then that money grows tax-free as well. So really powerful. Or they can gift it back to you and you can just pay for stuff. All righty, the ebb tide plan. So this is where we look at all the lower tax brackets around you and basically utilize them for your benefit and sometimes their benefit as well. Since my dad does this with my grandma, I'm going to have him talk about it, and then we'll talk about basically how we use that to help Juan.
So what I do, my mom's 90 years old. She lives on Social Security and has a very small pension. So she needs some extra financial help. So I do help her. So what I did is I formed a corporation. It provides a service to my CPA firm. And then I paid that corporation a profit of 94 or 84,000. That 84 now gets taxed to my mom instead of me. So I saved 41 in tax, and my mom only had to pay $11,000. So with the money that I put in the corporation, I gave my mom I paid the taxes on it, the 11,000. And then I gave my mom the money that I give her anyway. I usually give her about 1,500 a month. And then she just gives me the rest of the money back. So that way it allows me to help my mom out. I get all the credit, but really the money's coming from the IRS.
Yep.
So this, take a look at everyone around you that has a lower tax bracket. This can be a great opportunity.
Yeah, so for Juan, for example, he was supporting his in-laws. So clearly they were at a lower tax bracket than him. What we did is we shifted $75,000 into that corporation owned by them. And then that generated a savings of about $30,000 for him each and every year. And so he just had them keep whatever he was comfortable with and then gift back the difference, similar to what my dad does. So you're able to help them, but you're using money that you would normally owe the IRS. So it's very powerful. What we also did with this is another variation of the ebb tide plan, is he had his daughter going to Arizona State. And so what he did is we set up a separate corporation in Arizona. He was in California, remember? And so he was paying out of state tuition. And so now, since we set that corporation up in Arizona, we were able to qualify for in-state tuition. And then, so that saves huge, that's thousands of dollars. And so not only did he save the close to $20,000 in taxes each year, permanent savings, never will have to owe that back. He's able to pay that. He is also able to qualify for in-state tuition. And then now every time he visits his daughter at school, or she comes home for holidays or just visiting, period, it's visiting a vendor, and they're able to write that off as a business expense. So pretty powerful. Dad, do you want to talk about the education credits?
Oh, the reason why we pay him $40,000 is the tax for the child on $40,000 happens to be $2,500. And there's $2,500 happens to be the amount of education credit you get. So that way that the child files a return with 40 on it, the tax is 2,500, the credits are 2,500, there's zero tax to pay. And the nice thing about this is a lot of times parents make too much money to take the credits. So it's just a great way of getting a $40,000 deduction. And you're spending that much money on school anyway.
Yeah. All right, now we're going to get Juan an interest-free loan from the IRS. So all of those savings and the strategies that we just previously mentioned, the kids payroll, the ebb tide plan, the Augusta strategy, all of that's pretty much permanent savings. So like I said, that's money he's never going to owe back. It's money that we took out of his taxable income, and he'll never have to pay that again. Now, deferred savings is money that we won't show in this year, but we'll have to pay money or tax on it down the road. And the way that we set up this strategy is basically you just won't show the income until you want to. So I'll go over that. But basically this strategy, the kick the can plan, gives you more working capital. It gives you more money to put towards your investments. It's not intended for play money. And so basically just make sure you use this wisely. But like I said, it does give you control of your taxable income. So this Juan, what we did is we looked at his P&L, his profit and loss sheet, and then we figured that he had high marketing expenses and also payroll expenses and subcontractors. So what we did, he had his main company, and that was a December year end. And so we set up a new company for his payroll and marketing expenses for a November year end. And so all year long, this support company, it's handling his marketing and his payroll now. It's going to be invoicing his main company, but his main company isn't a good customer, and it doesn't pay its bill until December hits. And then it just pays everything off, which generates a huge deduction to the main company, but it's not taxed to the support company until the following year. And then you just kick that can down the line, do it all over again, rinse and repeat. And so that's why we call it the kick the can plan. That can never goes away. It needs to be picked up at some point. So it's just basically planning on when you're going to do that. Now for Juan, what we did is we spread it out over several years. We were able to get a $1.4 million deferral in the first year, and then it's $8 million in later years. So we spread that out. He's going to have to owe it back. So what he did is he got a life policy. We always encourage people at least have some sort of coverage to match that deferral, so that if you die prematurely, your family's not left with a big bill. My dad always likes to throw in, if you want them to. He's like, but basically with the life policy, if you have it secured with that, you can kick the can, and we like to say, kick the can until you kick the bucket, or you can pay it off at the time of your choosing or when you close down your company. So lots of flexibility there. Next, we'll go over what Juan did with the money in a little bit, but before we do that, we'll talk about some capital gain strategies. And the idea behind this is not to teach you or bore you with some really in-depth strategies, because these are very complicated and they're just far and few used, only when you're selling a property or a business. Any type of highly appreciated asset over $200,000 in gains is when you'd be looking at using this. I more want to make you aware that they're available, so you can take a screenshot of this and then also use it to your advantage. I'll talk about that in a little bit, but we have before the listing, charitable LLC or a charitable remainder trust. After the listing, but before the sale, we have a deferred escrow trust. After the sale, but before the end of the year, we have a charitable lead trust. Mainly the point that I want to push in here is talk to your tax advisor prior to a sale of any type of asset. Otherwise, you don't want to have the, oh, you did conversation where they come to you and you tell them, oh, I just did this. And they're like, oh, you did? You should have talked to me ahead of time. So just make sure you're talking with your person prior to selling your asset. Dad, I'll have you talk on this since you kind of worked through this with him.
So I had a client who sold his business for $6 million, almost all gain. The tax would have been 2.2 million. By setting up a charitable LLC, we were able to get the tax down to $128,000. And he still had all that money sitting in a piggy bank that he's able to use for future deals. And this is money that goes away permanently. Now you do need to, a lot of times we recommend doing a life policy for the 2.1 or the money that was stayed in the charitable LLC. That way your family gets the same amount of money. But the $2 million in tax really never got paid. So anybody that's selling a big capital gain, this is something just to check back with us when you do have that happen.
Yeah. And like I said, use this to your advantage. You can give yourself an edge over your competition if you're wanting to buy a property, or if you're a realtor and you want to sell a property, but your client doesn't want to deal with capital gains. Hey, I got a solution for you. It gives you an edge over your competition. And then one more thing to touch on is, although death is not a very exciting thing to think about, it can be a real money maker. So, Dad, I'll have you talk about this a little bit.
Yeah, and not just for the morticians, okay? But when you inherit a piece of property, you get what's called a step up in basis. That means if you bought a piece of property for $100,000 and now it's worth $1 million, if you inherit that property, your tax basis becomes $1 million. So when you sell it, there's no income tax to pay on it. Well, what happens if you took a piece of property like $100,000 property, put it in your parents' name before they pass away? When they pass away, if they will that back to you, now you can redepreciate that property and don't have to pay capital gains when you do sell. So it's a real opportunity. You just have to be real careful that the parents make sure they have a living trust updated that you can intercede on, and make sure that your siblings and stuff know the joke, so they don't protest it or anything like that. So it's not without danger, but it is a real opportunity.
Yeah, just make sure you're working with an attorney to cross all the T's and dot all the I's so you don't get a surprise down the road. All right. And then the last thing we walked him through is get your money for nothing and your dreams tax free. So we always encourage you, if you can save money on your taxes, use that to fund your dreams and your goals or your investments. So for Juan, really a big part of him is he wanted to be able to be more present as a father and a husband. And so this allowed him to do that. It made his hard-earned dollars stretch further. He owed less to the IRS, and he was able to keep more and also invest more. So he put his deferral. You remember that interest-free loan that he got, the $15 million deferral that was basically $8 million spread out over the course of several years. He funded his real estate portfolio with that in 2010 and still has it today. So can you imagine what that's done for him over the course of his entire life? It's pretty awesome. But more importantly, like I said, he's a more present father and husband. And really the point of all of what we do is not necessarily to be a more present family person, but just to have your money give you freedom, give you the ability to do what you want to do. And so he was able to do exactly what he wanted to do with that. So how would an extra $67,000 a year plus a loan, interest-free loan of $1.4 million sound to you? How would that impact your life? I would like it. We like to also mention smaller savings, the $67,000 a year, netting $1 million. A lot of people go, well, I'm not doing that, so that's not going to make a difference. But sometimes smaller savings can have a bigger impact. People that are working, starting a business, starting their real estate portfolio, just a small amount, let's say $6,500, if we were to save you that each year. That sounds small to me because I meet with people all day, and anything under 10,000 feels small, but really $65,000 is a lot. It's invested. Let's say you plug that into something over 20 years and you got 5% interest on that. Only 5%. That's really doable. It would give you an extra $232,000 almost over the course of that 20 years. And that's all without changing your lifestyle, all without doing anything to grow his business. Basically, you don't have to sacrifice anything. You just change tax planning. That's it. Be strategic with your money. And it's amazing what that can do for your future. All right. So, whoops, jumped back. So we were able to, hopefully you guys got at least a tip or two that could help you. If not, then maybe in the next couple of years, you'll be able to plug in those little pie pieces and really impact your guys's your goals here. So we plugged in a little QR code. You guys, I'd love to extend a free tax assessment for you if you feel like any of these things would be helpful, or if you have any tax questions or anything, happy to help. It's just, 20-30 minute call where I'll ask some questions and I'll be able to quickly uncover if we can save you guys money or not. So, and sometimes we'll meet with you and you're doing a great job. So it's helpful to know that too. We always say if you're getting a medical diagnosis or any work done on your house, you always get a second opinion. So people don't really do that with taxes though. So it's important too. But we're happy to offer that for you. And then oftentimes we'll post, I try to post daily on our Instagram and my Instagram. And then we also shoot out newsletters, not to bomb up your email newsletter, but to at least give some tips and value.
Mhm.
So we'll open it up for questions now.
Okay, I'm going to start off.
Yeah.
Quite a few people emailed me stuff instead of in the chat, but that's okay. I got a couple questions that I took notes here as we went, because you start talking about taxes and a lot of people try to not talk about it, and they'll say, I got a guy. So yep. I just want to kind of clear up, what should a real estate investor look for in a tax professional instead of the guy?
Yeah. So most people that come to us, they want their tax professional to be proactive. And so what does that mean? I'd say somebody that is at least meeting with you prior to the end of the year. So we meet with our clients after October 15th, before December 31st, and you'll know exactly what you're going to owe in tax before tax season. So somebody that's doing that with you at the minimum, and then somebody that's asking you questions to save you money rather than questions to just fill out the forms. So making sure you have somebody that has your back and that is, I guess, just putting more tools in their tool belt to be able to save you money each and every year, because things change all the time. The tax code is actually, this is a fun fact. It is so thick that if you hold it up to yourself and you shot a Colt 45 at it, it would not penetrate. And so only 30 of those pages are telling you how to pay. The rest is telling you how not to pay. So it's important to have somebody that understands that.
Gotcha. All right. So because we are a real estate investors association, and can you give us some other examples how you helped real estate investors?
Yeah, I know my dad has to pop out in a couple minutes, so I'll let him answer this so you guys can pick his brain a little bit.
So I have one real estate investor. He does very, very well, and he is a wholesaler. And what he did is he ties up properties and he sells them. You know, he didn't even take title to them. He just transfers the right to buy that to a flipper. So what he did is he does it through his Roth IRA and does 5 properties a year through a Roth IRA. That way the Roth IRA is not a dealer, and he makes about $25,000 per property. So he can make $125,000 tax free. But he has a Roth IRA. His wife has a Roth IRA. Both of his kids have a Roth IRA. So between all that, he gets $500,000 a year tax free.
Awesome. I hope he keeps one of them out so he can have some spending money to enjoy the
Well, he
fruits of-
does. He makes about
You know.
$2 million a year net. So he has plenty of spending money.
Okay. You know, I want
Also,
people to- Go ahead.
also that kick the can plan that we told you about, we could do that backwards and help people qualify for loans as well. We've done that in the past where they didn't have enough income to show for the loan that they wanted. And so we were able to jack up their income. And so they're able to qualify for a loan that they would not have otherwise.
So just with that in mind, so some tax planners say go the salary route, and others just say just take disbursements. Do you have any comment on that?
Out of an S corp?
Yeah.
So the biggest red flag for an S corp for an audit is not having a payroll that has it's enough or at all. So it's important to have that low but reasonable salary. If it's an LLC, then you can just take distributions, or sole proprietor. Outside of that, it's important to have a salary. Dad, you want to expand on that at all or no?
That's correct. If an S corporation with no salary will get audited and you will lose if it's making a profit and you're pulling money out. If you don't pull money out, you don't have to pay a salary.
Right.
I'd like to, before I dial out for another appointment, somebody asked about expanding on how they're leveraging the IRA. Basically, they're just doing a Roth IRA. They form an LLC within the Roth IRA, or they don't have to, and they just purchase the right to buy that property through the Roth IRA. And they then turn around and resell that right to purchase that property to a flipper. So they don't ever take title on it. And that allows them, since it's a capital gain, it doesn't cause problems within a Roth IRA. So that's how they do that with an IRA. A lot of your self-directed IRA companies can really, and I talked to Carl, there's a lot of them that can really help you with this too, to give you some guidance on how to do it.
Okay. So I'm the type of guy, I'm always looking for, what's overlooked, what more can we do? So could you give us some overlooked tax strategies? I know you went through a couple, but is there anything else that real estate investors should be aware of?
I would say those are the big ones that we've seen. Dad, I think he just popped off, but I'm pretty sure those are really the main ones that we've seen. Like on average, I'll talk to people, and that is they save an average of $40,000 just using those simple strategies. So it can, and that's without the kick the can plan. So those are the big ones. The other big one is to make sure that your tax professional understands real estate benefits. So real estate professional status, for example, making sure that if you do qualify for that, which if you have questions on that, we have a flow chart we can send out, but just little things like that. And then really overlooked is the importance of proper bookkeeping, because as boring as that is, it's important to capture every little thing possible and making sure that you're taking advantage of everything possible, because you can't plan
Is that
until you do your
something you
numbers.
do also, or no?
The bookkeeping, yeah, we have a full service accounting firm. So we have payroll, bookkeeping, tax prep, tax planning. We can hook you up with all of that.
Okay, so my last question before I start some of these, because a lot of investors with us are brand new, you know, they still have to, they might have an LLC already, or they might be looking what state do I
Yeah.
set one up and what have you. But what does the new investor really need to do to get as many tax deductions as possible, you know, as a startup?
Yeah. Yeah, I'll touch on the bookkeeping again, making sure you're doing that. And then we also have a tax course that we filmed kind of the first version. We're going to refilm it in August. That'll be a lot better. But if you guys shoot the email here, info one stop tax strategist, just send over if you're interested in the flow chart or the course, and we're happy to hook you guys up with that. That'll give a lot of just the little tips and tricks with what to do as a new investor. And then also down the road as you grow, you know, for the newer and seasoned investor, I think there's something in there for everybody.
Awesome. All right, so now I'm going to read some of these. So just give me a second here.
Yeah.
Can you explain how real estate investors can take advantage of depreciation and cost segregation to optimize their tax position?
Yeah. So I usually have my dad talk about this one, so I'll do my best. But basically, I'm kind of the face of the company, so I don't do a lot of these
Nice
parts.
face.
Yeah, the face. But basically, you have to qualify as a real estate professional, and that means that you're doing 750 hours of real estate work that qualifies in the eyes of the IRS. So that's where the flow chart will be really helpful. It goes through just some examples of activities that you have to do. Like, unfortunately, driving to and from your property doesn't count, even if it's, you know, an hour away. So just things like that is important to make sure you're maximizing on that. If you do that, then you can turn your passive income into active income, which that turns your passive losses, it enables them to offset your active losses, or active income. So it turns your passive losses into active losses and your passive income into active income, which essentially, let's say you have a high W-2 earning spouse. If you are a real estate professional, then that can offset their income in correlation with the losses that you're basically generating in your real estate portfolio.
Okay, so just go over the real estate professional details for me and the benefits. I don't even know if I've registered as that. So,
well, the cool thing is you don't have to be a real estate, you don't have to have a license. You just have to qualify for the hours. So it's essentially, let me see if I could even pull it up and show you guys, but it's basically just doing real estate income. So if you're going and doing work on your properties, so it's hard to qualify if you have a property manager, for example, and if you're not working at least 15 hours a week in your real estate investments. That's kind of the biggest thing.
okay.
Yeah.
So because we look for deals all over the country, this next question is actually very good, I think, is what are some of the things to be aware of when you invest in multiple states?
Yeah, so different states have different tax traps. So for example, Tennessee has an excise tax of 6.5% of your net income. In other examples, New York City doesn't acknowledge S corps. Tennessee is another example of not being a good state for S corps. There's like a short window of income that makes it make sense, but different states have different just tax laws, and so it's important to work with a professional. If you are investing in multiple states, work with a tax professional that understands multiple states and has knowledge in those and experience, I would say.
Okay, so next question, should I believe what I hear on TikTok about setting up companies?
No, not always. Yeah, it's the TikTok. There's a lot of experts out there.
Yeah, all right. So is forming a holding company beneficial?
It might be for liability purposes, but not income tax purposes. So we would always say refer to an attorney for that, for liability issues. And on the tax side, it doesn't save you anything unless you're doing the fiscal year in company setup that we have. That would be a different situation, though.
Okay, so you always hear about entity structuring in Nevada, Wyoming, no sales tax. How is that? Is that something beneficial?
So normally a person, they'll pay the tax in the state that they live in. So like for me, I'm in California. So even if I had a Nevada company or anything, California would still be greedy and they would want all their taxes paid here. And so that doesn't save them anything typically. I have seen them do it for legality purposes or, you know, different kind of liability shields and protecting themselves in that way. But tax wise, the state that you live in is where you're going to pay tax on. And they're very aggressive. They'll even have like, they'll ping your cell phone to see where you're staying most of the year. And so they can look at that, because we've had clients that try to pretend they live in Florida and we're like, well, they're gonna, you know, just so you know. So they're pretty aggressive at what comes to them, especially California, but it's a case by case situation. So definitely would require a conversation for me to give an exact answer.
Okay. Do you have a preference that or an entity people should be looking at?
Yeah, so it kind of like what we went over on that step 2. It just depends. Buy and hold, LLCs, flips and wholesales, S corps are good. Airbnb, typically above that $67,000 threshold, but it depends on the state that you're in. Regular business, same thing, it depends. And then notes, it doesn't matter. Sole proprietor is fine for that.
Now, you mentioned, I think your dad mentioned also trust. Is it beneficial to set up a trust instead of an LLC for property?
So the trust for the property, that's a more of a protective barrier, and it's smart to do because I think it makes it hard for people to search for who's the owner, especially I was actually just at in a mastermind group that they talked about this. And I have an attorney that is knowledgeable on this if you guys need somebody, but he talked about how if you basically never have the property in your name, but set it up to the trust, it's the best way to do it because people can't search that. For tax purposes, you're going to pay it at the trust level. Typically, we don't see that makes sense or is beneficial, but once again, it's a case by case situation.
And is there any other ways to avoid capital gains tax?
The hangover pills that we talked about. Also the installment sale. I'm not very good at explaining that one, but that's a good way to save during the sale, or a deferred escrow trust for that. And then all those hangover pills that we talked about are the biggest things that we look at for avoiding capital gains.
Okay, so you did mention something in regards to structure for people running Airbnb businesses. So special tax considerations for investors who are doing short-term.
Yeah,
property.
short-term property, typically, you know, under 7 days of people staying there. If your net income's over 70, typically it makes sense to consider an S corp. And then the cool thing about the short-term rentals is it's easier to justify a modeling expense. The long-term rentals with your kids, like if you have kids, for example, it's harder to justify modeling if you have somebody that's already staying there. Where short-term, you have to constantly find people. And so you do more advertising. And so it's nice to be able to justify that.
Okay, here's one for you. What's the cleverest strategy you have seen with a self-directed IRA?
So that's the one that my dad went over, where the wholesale put the options to tie up the property inside of the Roth, and then he basically sells that option inside of it, and it makes the gain non-taxable. So he kind of shared about our client that does that and does it with each of his family members. So he's able to get a lot of income tax-free that way.
Okay, and then the last one is, what is bonus depreciation that I have here? Yeah.
Bonus depreciation, it allows you to basically depreciate the property faster than you would normally. So that's actually going away. It was 100% last year for 22. This year, it's going to be 80%, and then it's going to go down to 60%. You can also, if you buy a car that's over 6,000 pounds, you can write that off in the whole first year. Now it's 80% in the first year, and then so on and so forth. So it just allows you to accelerate that depreciation and write off a lot more to offset your income.
All right, now I'm going to go through the questions on the chat. So just give me a second
Okay.
here. Linda, to everyone, to make sure that I'm getting the tax benefits, especially the bonus depreciation, instead of meeting toward the end of the year, How can I keep track of it, or do I make sure that I am not missing any tax minutes throughout the year?
Yeah. I don't know what your current tax person does, but for our clients, we have unlimited calls. And some of our clients prefer to meet with us several times throughout the year and, sit down, or they just like to just kind of touch base each month or each quarter. And so it really depends on your situation. I just say, make sure whoever you're working with, that they don't charge for every call so that you're comfortable calling and asking questions throughout the year. But typically, if as long as you're talking to your tax professional before you buy or sell a property, or any asset for that matter, and then any big moves basically, and then at the end of the year, then you should be good to go.
Okay, and then one, a couple people will ask, they want the flow chart again. Would they
Yeah.
just email you at the info at One Stop?
Yeah, shoot us an email. Say you want either the course or the flow chart. We're happy to send that to you. My dad and I wrote this tiny little booklet, so it shouldn't be that long of a read, but we wrote basically the 7 dangers we found entrepreneurs and investors experience. We talk a lot about my dad's stories, for example, the tree story, but he's almost died like 7 times. So you guys get to know him a little bit more in that.
And then Barb was talking about, can you expand on how they are leveraging the RA? Do they pay UBIT or UDFI taxes?
Unfortunately, I don't know about that. Like I said, I'm more of like the gatekeeper front of the company, but I can find that out. Barb, if you want to email the info at One Stop, I can talk to my dad or our tax team and get an answer to you.
Awesome. Thank you very much.
Yeah.
Guys, if there's anything else, please put it in the chat. I've stopped checking my email at this point. So I think we've learned a great deal. I know I've learned enough that I know it's complicated, that I still want to use a tax professional for everything I do. There's no way I want to keep track of this stuff myself. So somebody who proactive and can tell me what I need to do and set it up is, a gold mine, in my opinion. And that's why we bring you these experts in this field. If you're interacting with Melanie or Brian, just let them know that you came from Boston REIA, so they know and can keep track of where, they're, instead of hearing about us on Google, you can tell me you heard about us at Boston REIA. If you didn't catch the entire presentation, within the next 2 days, I will have this up as a replay, so you all can get a copy of it, and make sure that you get on her news list. Just go to your website for your news list. Is that correct?
Yeah, or you can either email or just go to the website and sign up there. And then if you're on Instagram, like I said, I do posts. I try to do them every day as much as possible. Sometimes I miss a day, but for the most part, I try to give a lot of value on there for free.
Awesome. Are there any other questions? We're going to end a little bit early tonight, which is fine. For those who are still recovering from the 4th. Anyway, guys, thank Byron for being on the call tonight with us. I really appreciate it. I thought it was some awesome strategies. I'm certainly, I know Kelly was taking pictures, and I said to her, hey, shoot this to our current accountant and see if she's taking advantage of this stuff, or we'll be talking to you really soon too. But thank you guys for everything. One more came in here from Josephina. Please, if my partner has a high W-2 and I am new to real estate investing, we filed jointly in the past, what would you advise going forward?
Yeah, that's when we can chat about the real estate professional status to see if you qualify for that. If you grab a call, then we can chat personally and kind of look at your exact numbers and then see if it makes sense. But just making sure you're at least tracking all your hours so that if you do hit that professional status, you can offset their income.
Awesome. And guys, I just want to remind you one more time, if you are not yet a member, please find us online or text Kelly right away and we can get you started. You do get a welcome call also from Sarah. So Sarah sets you up with the Home Depot program right away, so you can get your benefits and into the system for July through December. The Home Depot benefits do add up tremendously fast, especially even if you're just going to use them for your own home to remodel your house. They can save you a ton of money, especially with the customized pricing, discounts on paint, etc. So Melanie, once again, thank you very much. Thanks, Brian, very much. Thank you
Yes,
for everyone who attended. And we have some great speakers coming up in the next couple of months that we've found at the Las Vegas National Real Estate Investors Conference. And we'll be putting more out to make sure you're on our newsletter, because we'll be talking more about the bonuses that you get now included with your membership. And I'm sure you're going to love them. So guys, thank you very much. Again,
Duncan, sorry to
Yes.
interrupt, but please let's remind everybody that this chat right now, you can copy and paste this chat so that you can get all that valuable information, all those numbers, all those emails, all that information, haves, needs, and wants. It's all right there in the chat. So a typical copy and paste, you just go up there, highlight everything, copy, paste, and put it into your notes or your files.
Yes. So yeah, guys, before I close on the meeting, your contact information, what you want, have, or need, what you do, write it very quickly in there. The chat does not get resent out to everybody. The video does, but the chat is only for the people who are online now. So, but you do have to copy and paste it. So I'll give you a few minutes to do that while I turn off my video, and I'll let it go for a couple more minutes just to get all your information in there. Networking is a valuable resource. So if you're not seeing us on person, seeing us here in the chat is excellent. Once again, everybody, thank you, and we'll see you next month. And we'll be look out for news coming into your inbox. Thank you very much. And Linda, can you just shoot your email to me at bostonrea@gmail.com, and I'll give you the link to the deal analyzer that your accountant will love, your investors will love, you will love, and it does everything for you. It's the best one I've ever found out there. And it's Boston REIA, BOSTONREIA @gmail.com, and just put in your note that you need that. Anybody else who wants a link to that, it is one you have to purchase. I think it's like $49, but once you see what it can do, it was made by an accountant. You will forever love me. So once again, I'm going to turn off my video. Email me any questions. That's it. Thank you, Kelly. Kelly has the membership, and we'll see you next month.
Thank you,
Thank
Sarah.
you very much, guys. Yeah, thank you, Sarah. See you guys.
My pleasure always.
Bye, everyone. Thanks for showing up.
Bye-bye. Good night.
Good night, everyone.